Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 15th, 2025, and we're diving into Ibotta's first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss Ibotta's performance and what it means for investors.
Let's start with a brief introduction to Ibotta. They're a leading digital promotions network in North America, and they've just released their Q1 2025 financial results. John, what stands out to you in this report?
Well, Ibotta has shown a solid performance with a 3% increase in revenue year over year, reaching $84.6 million. Their strategic initiatives in the CPG industry are starting to pay off, and we'll delve into that further.
Revenue and profitability overview. Let's start with the top line. Ibotta reported a revenue of $84.6 million for Q1 2025, which is a 3% increase compared to last year. John, can you shed some light on this?
Absolutely. The revenue growth is primarily driven by an 8% increase in redemption revenue, which reached $73.4 million. This indicates that Ibotta's digital promotions are gaining traction among consumers and brands alike.
And what about profitability?
Ibotta generated a net income of $0.6 million, which is modest but positive. More importantly, their adjusted EBITDA was $14.7 million, representing a healthy 17% margin. This shows that the company is managing its costs effectively while expanding its revenue base.
EPS performance and analyst expectations. Now let's talk about earnings per share. Ibotta reported an adjusted EPS of 36 cents, which is significantly higher than the forecasted $1.01 by analysts. John, what does this tell us?
This is a clear indication that Ibotta has outperformed expectations. The adjusted EPS of 36 cents reflects strong operational performance and cost management. It also suggests that the market may have underestimated Ibotta's ability to generate earnings in this quarter.
That's quite impressive. How do you think this will impact investor sentiment?
Positive earnings surprises like this often lead to increased investor confidence and can drive the stock price higher. It reinforces the narrative that Ibotta is on a solid growth trajectory.
Future outlook and guidance. Looking ahead, Ibotta has provided guidance for the second quarter. What can we expect?
Ibotta is projecting revenue between $86.5 and $92.5 million for Q2, which represents a 2% increase at the midpoint. They're also expecting adjusted EBITDA to be between $17.0 and $22 million, with a focus on improving margins to 22% at the midpoint.
What does this guidance suggest about their future performance?
The guidance suggests that Ibotta is confident in its growth trajectory and ability to enhance profitability. Their focus on margin improvement indicates a strategic approach to balancing growth with cost efficiency.
Key takeaways. As we wrap up, let's summarize Ibotta's performance and investment prospects. John, what are the key takeaways for investors?
Ibotta has delivered a solid performance with a 3% revenue growth and an impressive adjusted EPS of 0.36 cents, far exceeding expectations. Their strategic partnerships, like the one with DoorDash, and a positive future outlook make them a compelling investment opportunity.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ibotta's performance in the comments below.